Hello trader, I hope you are all well. So welcome back to this video today. So as usual, today being on Sunday, you know very well, I do come here to give I do come here to give you my overview on the market structure. That is what I'm watching. I will be watching for the coming week. So if this is the first time that you have landed to my channel, let me take this opportunity to welcome you to my channel. My name is Anthony, a full-time trader. So I do the market analysis using the SMC concept. So on every Sunday, I will be coming here to give you my overview and also my watch list, the pairs that I will be watching for the new coming week. If that is something that you would like to learn or you'd like to learn from me on how to do the market analysis, then you have only one duty to do. So I request you to make sure you subscribe to the channel and also don't forget to turn on the notification bell so that you get notified immediately I upload a new video. So without wasting time or without further ado, let's dive into the market and see what the market has to offer for the coming week. So in front of us, here we are on a Euro USD on a monthly time frame. So these are one of my favorite pair, and this is the pair that I would like us to start our analysis with. So on the Euro USD on the monthly time frame, as we have been doing, you can see very clearly there is no rocket science here, guys. So you can see very clearly that on the monthly time frame, the market is really bearish, right? So what do you do? So according to how I do my analysis, I like to go to the last dealing range because that is what I will be trading as a day trader. So what do I see on as my dealing range? You can see very clearly that this is the last dealing range that we are operating from this swing high all the way to this swing low, meaning this is your bearish breakout structure. Now, the next question I will always ask myself, is this a strong high? All right. If you don't know how to identify whether this is a strong high or not, so I have a video onto my channel. So you can find that video onto my channel, or you can always watch my previous video. I'm really pretty sure that already explained how to identify a strong high and also a strong low. So this being our strong high, since it swept this internal liquidity within the impulsive move to the downside, so this one becomes our protected high and this becomes our targeted low. All right. So after doing that, after the market takes out the external structure, we know very well the internal structure becomes liquidity, right? So what do we expect? We expect the market to come for a pullback before a continuation to the downside, right? So where do we expect this pullback to come to? So we know, you know the drill. We normally place our Fibonacci from the top or from the swing high all the way to the swing low. The idea of doing this is for us to identify where is the premium and where is the discount. As usual, the premium is always above the 50%, the discount is always below the 50%. So any point of interest that is resting at the discount, we don't have any business with it, right? So when you are marking your point of interest, always make sure the point of interest is resting within what? Within the premium. And that is why you can see we have this extreme supply zone or an order block that is sitting on the premium. All right. Since the market now traded to that area, now because we don't just jump in once the market taps to your point of interest, so we need to wait for what we call a confirmation. All right. This one brings me to the next part of our analysis, which is the time frame alignment, which is also a very crucial part of market analysis, because if you get your alignment wrong, then there is a high chances then you will be manipulated by the market. So this one being our monthly point of interest, then we should be going to the daily time frame for us to get our confirmation. And if you don't know how I arrived at the daily time frame, I also do have a video on how to do the time frame alignment. So make sure to find the video onto my channel, watch the video, and I'm promising you, you will be educated and you'll get enough knowledge as far as time frame alignment is concerned. All right, so let's just go direct to the daily time frame. What are we expecting? The same thing. Since we are on the monthly time frame, Remember, every time frame has its own story, right? The same thing that we have done on the weekly, on monthly time frame. When you arrive at the daily time frame, you expect to see a different structure. So, what do you expect? Since the market tapped to this area, or since the market created this swing low, when the market is coming for this pullback, what do you expect? We expect the trend of the market to be bullish, right? Since the market is coming for a pullback. And if you look closely, since last year, January of last year, the Euro USD has been bullish until it reacted from this supply zone or from this daily, from this monthly order block, right? Since after the market up to that monthly order block, as usual, we'll do our analysis again. So what do I need to do, or what do I need to see? For me, I will just ask myself, what is the last structure uh, before the market reacted to this point of interest of yours? And you can see very clearly that this is the last bullish break of structure, right? Was this one a strong low? That is always another question that I ask myself. You can see very clearly that the market swept this internal liquidity from this previous swing structure, because this was your previous swing structure because of this break of structure, meaning any internal structure within this dealing range becomes liquidity. You can see the market had this pullback, swept all this internal liquidity before giving you this break of structure, right? So that means what? If the market comes down and closes below this low, you have got a strong change of character. So you can see here we have a market structure shift, meaning now we have a very strong change of character since this one was a strong low. All right. So at this moment of time, this becomes my swing high and this becomes my swing low. So as usual, again, we repeat the same procedure. Nothing changes. Place your fib from this high all the way to the low. What do you need to do? We need to mark a point of interest that is resting at the premium again. Because since now the market has given us a change of character here, you don't just start placing your limit orders or start just jumping in, right? So you need to put your Fibonacci from the swing high to the swing low once the market confirms whether this is your swing low, right? So identify a point of interest that is resting at the premium, right? Sometimes you might have like 2, 3, 4 points of interest depending how the market moved within this impulsive move, right? For this scenario here, we have got only this one order block here because we can't see any other order block above this area. Everything was mitigated. You can see very clearly that this order block was mitigated by this small pullback, market up there, reacted from there. And we don't have any other fair value gap that was created. The only gap that you can see it was this gap. So now at this point of time, this is your only point of interest that you can see at the premium for this time frame. So what do you do again? Because this point of interest of ours is not sitting at the extreme, we cannot start placing a limit order, sell order here, stop loss above here, and then I take profit around this area, right? Because the best place to put your stop loss should be above the swing high. And if you do that, you can see the risk to reward is not good because you can see the risk to reward, the return will be 1:1. And for me, I like to take at least 1:3. So if I decide to do this, I I will not get a very good risk to reward. So what do I do again? I need to wait for another confirmation once the market comes to this area. Again, since we are on a daily time frame, this point of interest is resting at the daily time frame or it's marked at the daily time frame. According to the time frame alignment, I should jump one time frame and go to the 1 hour time frame. And also, you can pay attention to my time frames. So these are my customized time frames. So, as much as I'm saying that you should be jumping one time frame and going to this time frame, so you should always make sure that this is how their time frames looks like, right? We have monthly, weekly, daily, 4 hour, 1 hour, 15, and 5 minutes, right? So, if your point of interest is coming from the daily, your entry time frame or the time frame that you should be waiting for your confirmation, it should always be on 1 hour time frame. So, what do we do? We'll go to 1 hour time frame. So what do you do again around that area? You will read the market structure. So what do we expect? We expect the 1 hour time frame to be bullish as it is heading to this area. And this is where most of traders get confused, right? You don't know how to differentiate between a pullback, and a continuation. So this is the pullback. And when you look at this pullback is bullish. This bullish movement does not mean the trend of the market has shifted. No. This is just to facilitate the pullback of the daily swing. Okay? And what is your daily swing? Your daily swing, this is your daily swing, right? This is from this low all the way to this high. Okay, so whatever is happening around this area, this is just to facilitate the pullback of this swing. Once this pullback is over, we expect the trend of the market to shift again from this bullish movement to the bearish movement. And how do we know that this pullback is over? Okay, so we need to see the trend of the market shifting, right? So what is the 1 hour trend at this moment? You can see that the 1 hour is really bullish, right? Once the market tap to this area, this is what draws me into my attention. Now I need to start observing the market, right? You can see this is the last bullish breakout structure which led to this change of character. Once I see this, I also need to confirm whether this is a true breakout structure, because sometimes market might give you a fake out only to realize that it was trying to give you a early sell signal. So for instance, at this moment, you can see that from the 1 hour, you can see we have a breakout structure here. And if you look closely, we have a tiny close here. So that means the market was trying to give early sellers a signal to start selling. All right. But when you go to the 4 hour time frame, I need to show you a very important point here. If you look at the 4 hour time frame, what is the 4 hour telling you? You can see from the 4 hour, we didn't even have this break of structure to the upside. All right. So that is how you confirm whether this was a true break or it was just a fake out. All right. So if you are watching the market from the 1 hour, confirm your structure from one time frame higher. For this case, you should be doing that on 4 hour time frame. If the 4 hour fails to close, that means there is high chances that the daily 1 hour time frame was trying to manipulate, or it was trying to give the early signal. So once I saw that, for me, I never looked for that selling opportunity, right? You can see even from the 4 hour we never had this close. But now look at this second one. You can see that from the 4 hour we closed above and then we closed below, giving us a very good change of character. You can see the market came for a pullback. Where did it react from? You can see very clearly that sorry, you can see that very clearly that the market came to this order block, right? And what is the right way to mark your order block? It is always, if you are bearish, it should be always the last buy candle before the sell. But if you are bullish, it should always be the last sell candle before the buy. And always make sure that there is a fair value gap attached to your order block. And secondly, make sure that this order block, or the order block that you are marking, it's a fresh order block. What do I mean by that? A fresh order block should not be mitigated. Okay, it should not be tapped. So it means now it is unmitigated. Once this order block is mitigated like this one, you can see this order block was tapped, meaning it was mitigated. So it's no longer useful for us, right? It has low probability of holding because it has already served its purpose. Okay, you can see the market reacted from there, and then we sold from that place. So since then, we can see that clearly that the market is really bearish. You can see we had a breakout structure there. We have this breakout structure because now we know for a fact that where is our next target of liquidity, or where is the next draw of liquidity, which is this sell side liquidity. So this is where we are heading next, right? After this pullback is over, what do you expect? We expect the market to push down and take out this low, right? So what we are supposed to do now is we are supposed to look for a continuation trade targeting this sell side liquidity. And if I look closely here from the 4 hour time frame, we can see that this is our last break of structure, right? So since the beginning of this week, I've been waiting for the market to come to this area, but unfortunately, market this week the market has been consolidating within this area. We never tap to this area, so this remains to be my point of interest for the coming week. This is where I will be watching the market from, right? So before we arrive at this place, let me take you through what I did here. You can see very clearly that we have this break of structure, right? So what is the next question I will ask myself? Was this high a strong high? All right. You can see very clearly this is a strong eye since it swept this liquidity before pushing to give you this break of structure, right? Since now this was swing low, what do? We pick our Fibonacci, place from the swing eye. We place from the swing eye all the way to the swing low like this. So if you want to mark your point of interest, always make sure your point of interest is resting at the premium since we are bearish. Okay, so make sure you mark a point of interest that is above the 50%. So what do we have above the 50%? You can see pretty clear that we have this very nice order block that is sitting around this area. Okay, the last buy candle before this sell movement that led to this break of structure becomes our order block. Because if you look closely above here, every order block was mitigated. Starting from this order block, you can see that this order block was mitigated by this pullback. Okay, we also have this next order block here. You can see that that order block was mitigated by this pullback. So the only fresh order block that you can see it is this order block, right? And also, since I don't take my executions from the 4 hour time frame, and also this order block of mine is not sitting at the extreme, the same thing that we have done on the on the daily time frame. So for me, I will not take my entries from this area like this. All right, because if I do that, my stop loss should be resting above here, and my take profit should be below this low. And you can see my risk to reward again is 1:1. All right, for me, I don't take that. I take at least 1:3. All right, so what do I do? What do I do? I will wait for a market to tap to this area because I have an alert around this area. Once the market taps to this order block, I will shift to which time frame again? I will go direct to 15 minutes time frame. So what do I expect? I expect the 15 minutes time frame to be bullish. It is as it is heading to this point of interest of mine. All right. So once the market taps to this area, I will wait for a 15 minutes time frame to shift direction from the bullish to bearish, and that will be my signal, or that will be my confirmation for me to start looking for selling opportunity. So in short, for the euro USD, I'm very bearish on the euro USD, and I will be looking to sell around this area, of course with a confirmation from the 15 minutes time frame, guys. And this is what I like to see. You can see the kind of pullback that we are seeing. This kind of pullback is what I expect to see. What do I expect to see? I expect to see bulls really struggling to push this market to the upside, right? You can see how impulsive the bears were when they were pushing this market to the downside. But you can look at the pullback. You can see that the pullback, the bulls are really struggling to push this market to the upside. So this gives me confidence that the sellers are still in control of this market. Okay. So once the market comes to the area and I see the confirmation, then I won't hesitate to take my sales targeting this low around this area. So that's my analysis on Euro USD. I don't know what you think about this. Maybe you can tell me on the comment section what do you think about this analysis. So moving to the next pair, which will of course be Euro GBP USD. The same thing with the Euro USD. As always, guys, and as I have always been telling you, if you are bearish on Euro USD, you expect to be bearish on GBP USD. So if you find yourself that one of them, those analyses that are contradicting, then this is where you go to the DXY. So the DXY will save you from that. That contradiction. So what do you expect? You go with the pair that is aligning with the DXY. If of course the DXY is bullish, you expect the dollar pairs to be bearish. Okay, so you expect the GBP USD, Euro USD to be bearish. If of course you find one of them is bullish, that is to mean it offers the same analysis with DXY. It means that pair it's gonna manipulate. So you go with the pair that is moving opposite with the DXY. All right, having that in mind, so this is what we are having on the Euro GBP USD. You can see that after this pullback, you can see this was the last break. We had a market structure shift here from, of course, from the 1 hour time frame, because from the 4 hour, this is not a break. Then you have this last break of structure here to the downside. So ideally, if you mark your point of interest from the 4 hour time frame, this should be your order block, right? You can see the last sell candle The last buy candle before the sell movement, that becomes your order block. Although this pair has already tapped to this area, but that is why I'm trying uh to refine my point of interest from the 1 hour time frame, right? And from the 1 hour time frame, this is where I have my point of interest. The reason I'm doing this, because if you look at the DXY has not yet came to this point of interest, right? Even when you go to the 4 hour time frame, you can see very clearly that from the 4 hour time frame, this is your order block, right? Of course, I don't forget that we have got this resistance here, which might turn to be support. We have a very nice resistance zone around this area where the market can come, react from this area, and then we buy from there, right? As much as I'm waiting for a market to come to this area, I don't forget about this area. We have a very nice resistance zone here, which might turn to be a support zone, right? Because since also if you look at the Euro USD, if you look at the Euro USD, you can see that we are very close to that zone. So meaning the DXY might come to this zone, react from this area, and then we continue buying from there. So that is why I'm using this one as my point of interest for on GBP USD. That is just a refined uh 4 hour zone, right? But also don't forget, the more you refine your point of interest, the more you increase the chances of missing the entry, right? So actually the best point of interest that you should be watching is this point of interest, right? You identified like that because we have a very big wick on top here. You can just decide to extend your PO high to that area, right? So what do I expect? Because this is a 4 hour zone and it's a very massive zone, I expect the market to come at least to the equilibrium or this point of interest, which is this area, right? So if the market can trade to that area, though that means it will tap into my 1 hour order block, right? So of course also make sure to wait for confirmation because I always advocate you guys to always wait for a confirmation because a good thing with waiting for confirmation, you'll increase your risk to reward, of course, and also you increase your confidence before taking that entry because now that means you have some more confidence because now the market is aligning with the external structure, which is this one. So waiting for the confirmation, you have seen that sell movement, meaning now you have more confidence compared to the person that is taking an aggressive entry from this area. Because most of the time, market can decide to sweep this high first before going down. So for the person that is waiting for a confirmation, you will avoid that loss. But for someone who is taking aggressive entry, you might get stopped out before the market moves on your way. So watch out for this area once the market opens today at midnight. So we'll see what the market will do around this area. So that is it with the GBP USD. I don't know what you think about this. You can also tell me in the comment section what is your bias on GU. So moving on to the next pair, we're gonna look at, of course, gold. So what is the gold doing from the higher time frame? Let me start from the weekly time frame. Okay, so from the weekly time frame, we can see that currently gold is moving down. So gold is currently bearish. Everyone can see that, right? So since we have the bearish movement, let me go to the daily. So from the daily time frame, you can see now we have a closure below this low, right? So we have the market closing below that low. So that means we might have that deeper pullback. That is something that you need to pay attention to because if the market confirms that this is your swing low, because we have not yet confirmed whether that is our swing low, how do we confirm that? Let me show you guys. This is where now you look at the fractal structure of this time frame. When you look at this fractal structure, you can see the last fractal break from this time frame, it is this low here. So that is the last fractal break. If really market wants to come for a pullback of this daily swing, so that means the market should first of all close above this high. Okay, so if we close above this high, it means now the market is now ready to come for a pullback, right? As much as the market is trading within this fractal break, it means now this low here is not yet confirmed. But if the market closes above here, that is when we confirm that this is our swing low, because don't forget, market can come to this point of interest and then continue selling from there. But once we have a fractal change of character, that is our confirmation that this is our swing low. So from today, I think you have learned something very important on how to confirm a swing low. Okay, a swing low is confirmed once we have a fractal change of character of the same time frame. Okay, all right. So having that in mind, so I have this one as my fractal break. So meaning this is my point of interest is at now. Okay, so what do I need to see? Let's go down to the lower time frame. You can go to the 1 hour time frame. So from the 1 hour time frame, I will always ask myself, do we have a structure within this area? And if you can agree with me, you can see very clearly that you have a very nice break of structure here to the downside. We have this one as your BOS. Okay, is this eye a strong eye? If you look closely, that eye swept this fractal high as liquidity. We have liquidity being swept before a break of structure, meaning this is your strong high. So you have a strong high, or what you call a protected high. Let me call it a protected high here. So I have this one as my protected high. So how do I identify my point of interest? Let me go to the 4 hour first and mark my point of interest from that time frame. So at the 4 hour time frame, I have this one as my point of interest. So this is what I'll be watching, guys. I'll be watching market from this area. So this is where I'll be waiting for the gold to come to this area. And of course, I will wait for a confirmation again around this area, because I'm aware that the market took out this external structure, right? And we know very well, once the market takes out the external structure, the internal becomes liquidity. So the market might use this one as liquidity and also come deeper, have that deeper retracement at least to the 50% of our dealing range before the continuation. Because if you go to the daily, so assuming now the market will close above here and confirm that this is your swing low, so meaning this will become your swing high, this will become your swing low. So where do you expect the market to come to? We expect the market to come to this order block here. One, we have this point of interest that is resting exactly at the equilibrium. That is will be one of my point of interest. Another one, we have got this point of interest here. This last buy candle before the sell, that becomes my next point of interest. If of course the market will violate this protected eye, then wait for a market on this area or on this area above here. But in short, the buyers on gold, we are currently bearish. So we should be looking for selling opportunity. So for me, these are the areas that I will be watching. In case this zone fails, then this one becomes my next point of interest. If this one fails, then this one becomes my last point of interest. As much as the market is trending between this high and this low, my bias is still bearish, right? But if, for instance, the market will continue buying and take out this high, that is when I will say that the market is bullish. But as at now, the gold is bearish. And these are my point of interest. So when the market opens, this will be my first PO high to watch. So this one remains to be my pending PO highs, because the market is far away from these areas. So I love them as pending. Okay. So watch out for this area. Of course, don't take an aggressive entry from this area. Wait for confirmation from 15 minutes time frame. Once you have that, take your sell from there. You target these lows, and always make sure you pay yourself along the way. If the market can give you 1:3, you pay yourself before holding, because sometimes the market can have, sometimes you might be wrong. Market can give you like 1:3 and then start reversing from that area. So that's my view on gold. I don't know also what you think about this. So maybe let me know on the comment section what you are you watching. So of course we are gonna move to BTC. We're gonna move to BTC. Let me start from the higher time frame. So from the BTC USD, of course for me, I was waiting for the BTC to close below this low from the daily time frame. And also I'm also waiting for the BTC to close below this low from the daily time frame. So once we have the BTC closing below this low, for us to confirm now we have a break of structure to the downside. But you can see what the BTC did. We just have a sweep of liquidity. And when you go to the higher time frame, even from the weekly time frame, you can see very clearly that after the BTC swept this liquidity, it's really rejecting from there. And you can see the last week close to be closed bullish. And we know for a fact that once the market sweeps the sell side liquidity, there is high possibility that the market will go for the buy side liquidity. And I don't like what the market is currently doing here. So we might have so judging from what we are having currently, it means now the market will be going for the buy side liquidity next, right? Because we never had a close here. If of course we had a close below here, then we could say that this is your protected eye, and then you expect the market to come and respect this order block, and then we sell from there. But as at now, for me, I'll be looking for buying opportunity on BTC USD. So how do I do that? You can see very clearly for me, after I saw this break of structure, this was the last break of structure. So this was my high here. And of course, this structure, because from this time frame, we can't see really a valid pullback around this area. So if you go to the 1 hour time frame, at least from the 1 hour time frame, you can see we have at least three candlestick pullback, meaning this is a structure. This is a valid pullback from that time frame. And of course, because this I never swept liquidity, I needed to see a confirmation. What is my confirmation? We need to see a structure shifting. So we saw this the last break, and then market gave us market structure shift. So of course, I was looking to sell this pair around this area. I think they refined my point of interest from 15 minutes time frame. So from the 15 minutes time frame, we had this very nice order block here. So this is where I was waiting. I was watching BTC. And now I want to show you guys the importance of waiting for confirmation. So you can see I had an alert here. You can see we have an alert around this area. Because when the market was coming to this area, I expected the market to be bullish. You can see very clearly that the 15 minutes is bullish. This is the importance, guys, of uh working with a higher time frame. Because if you are doing taking your analysis from the 15 minutes time frame, you will see that the 15 is very bullish, right? Without knowing that this one might be just to facilitate the pullback of the higher time frame. Once the pullback is over, the market is gonna start going down. So always it's good to work with the higher time frame. Even if you are a scalper, it's always good to know what is happening on the higher time frame. Okay. So from the 15 minutes time frame, this was my last strong break of structure. So I was saying if the really one market wants to sell, then it should push down and break this low first before I start looking for any selling opportunity. And you can see very clearly that market tried to consolidate within this area. And this is a red flag for me. I don't expect to see market consolidating once it taps my point of interest. I need to see a rapid rejection from there. And you can see the sellers who are really struggling around this area. So that one drew my attention, and I said, if I have to take any entry, then the market must close below this low. And you can see me waiting for a confirmation saved me from that loss, because you can see the market went ahead and closed above here. Once you have a market closing above your point of interest, this point of interest becomes invalid. Okay, so it means now the buyers are still in control of this market, and you can see very clearly that the market closed above this area. You can see we have a closure above this area, although we are still trading below this low. You can see the market is still respecting this low. Okay, so that means if I need to take any selling opportunity, then the market has to close below this low again. Okay, that is how serious I am. I need to be very patient with the market, right? So if I have to take any selling opportunity, this is my last lower low. That one is my last higher low, sorry, higher low, because you have this breakout structure, then you have a change of character here to the upside, right? So meaning this is my strong low. So as at now, if of course the market will close above this high, I need to see a market closing above this high, at least for me to get an external change of character. If I have that external change of character, that means this order block from the 4 hour becomes my point of interest for me to start looking for buying opportunity. Of course, you can see the 4 hour also confirmed that this is a break of structure to the upside, right? So for me, I need first of all to see a close above here from the 4 hour or from the 1 hour, and then after that I will wait for a market to come to this area, and then I will take my entry around this area with of course with the confirmation to take this market to the upside. So for me, for now, I'm in a short buys on BTC USD. All right, I will be looking for buys on BTC USD. Okay, but if the markets will respect this high, go move down and close below this low, then my bias will shift from bullish to bearish, and I'll be looking for that selling opportunity to the downside. All right, so make sure to pay attention to that. Of course, if I have an update by Wednesday, I will come here again and I'll give you that update. Okay, I believe by then the market would have given us the direction that it want to go to. Okay, so that is it on my view on BTC USD. So someone requested me to do analysis on USD JPY. So let me look at the USD JPY. Okay, of course we are going to start our analysis from the higher time frame. So from the weekly time frame, we can see very clearly that we are very bullish on this pair. Okay, so what do we have here? So that means this is your swing high. So that is your swing high. This is your swing low. Sorry. So this becomes your swing low. Because we said, for me, I will always ask myself, what is your last dealing range? You can see this your last dealing range. Was this one a strong low? Of course, it was a strong low because you can see swap this liquidity here, right? Before this buy movement. Okay. So did this pullback come to the 50%? At least to the 50%. Let's confirm. If we place a fib from the high to the low, we can see that the market traded to the discount and then we are currently buying, right? So since we are very close to the target, this is our target, the buy side liquidity. I will just go to the last internal structure. What is your last internal structure? This becomes your last internal structure. Okay. So we have this break of structure to the upside. Of course, this is a very good break of structure. You can see it swept this internal liquidity before pushing to give you that break of structure. This is a very strong low. And I can see very clearly that the market traded to the discount. Already the market had a pullback of this dealing range or this internal dealing range, and we are currently very bullish. Okay, so think from the daily time frame, if you look at the daily time frame, you can see that structure very clearly. We have that break of structure which swept this internal liquidity before pushing to give you a break of structure. So now it means that the swing high of this internal dealing range becomes this high, and then this is your low. Okay, and I can see that the market is very close to this point of interest. So that means we should be looking for a structure that is very close to this area. That is from the 1 hour time frame. Maybe let's see from the 1 hour time frame what do we have. So from the 1 hour time frame, this was your last strong BOS. But I don't like the kind of price action that we're having on USD JPY, guys. Okay. So for me, if I was to trade this pair, I really wait and see at least for a market to take out this structure, because currently for me I don't have a good structure within this area. This is just a very big weak rejection below here, and I don't like the kind of price action that we are having here. Okay, so for me I'll just give this pair some time at least for it to break above this eye. So once we have that break above this eye, so that means we will have a new dealing range, right? From that high, from the new high that we will have up to this low. Okay, so what do you expect? We expect a little retracement to this order block. Okay, we expect a little retracement to this order block and then a continuation to the upside. Okay, at least I would advise wait for this eye to be taken out, at least for you to have a good break of structure to the upside. Then wait for a small pullback before you look for any buying opportunity. So for me, my bias on this pair is bullish. You should be looking for buy opportunity, waiting for a market to take out this buy side liquidity. Okay, so once the market takes out this external structure, that means what? The internal structure gonna be liquidity. So your low is going to be this low. Okay. So if by this coming week the market will close above here, that means this is gonna be our swing low. This is gonna be our new external structure, and then the new higher high the market will be printing. So in short, my bias on this pair is bullish. You should be looking for buying opportunity. So also, upon your request, you also requested us to do the analysis on GBP JPY. Let's see what the GBP JPY has to offer. But of course, we expect the pair to be also bullish, right? What do you see? You can see very clear that this pair is also bullish, right? So moving to the last dealing range, this becomes your external structure, right? Or this becomes your dealing range from that high to this low. So what do you do? Let's go to the at least the daily time frame, because we are doing a top-down analysis. Was this one a strong low? Of course, it is a strong low, because you can see swap this liquidity before pushing to give you a break of structure, right? Did the market come, did this pullback come to the 50% or to the discount? Let's check. If you place a swing high from fib from the high to the low, you can see that market traded to the discount, and we are currently very bullish, okay? And of course, the market traded to this order block before starting this rejection from there. So going to the 4 hour, right? Going to the 4 hour, I can see this is the last place I saw a good structure. You can see we have this break of structure. Now, this is why I'm telling you it's very important for you to wait for a market to come to the discount. If you look at this pullback, if I place my fib from this low, uh, from that low, from that high, to this low, do you see the market? Market never came to the 50%. That is why you are seeing the market later on came down to this area before going up. So to me, this from this low all the way to this high becomes one structure to me. Okay, that is just one structure to me. What do you see? Market came to the 50% or to the discount. So of course the market had to use this one as liquidity, because this area is sitting where? Is sitting here at equilibrium, and we don't have any point of interest within this equilibrium. So market had to use this low as liquidity, came down to react from this order block that is sitting here. We can see we have a very nice daily order block there. And what are we seeing with this order block? It's a fresh order block, guys. The last sell candle before the buy, which has a very tiny fair value gap there. So meaning these are very fresh order block. Secondly, this order block becomes very favorable because it's sitting where? At the discount. Okay. We also have another extreme point of interest here. We have this extreme order block. Okay. But since because this order block is sitting at the discount, so we expect to see reaction from there. So market can decide to use either this order block or this order block. So for this case, market used this order block. And what are we seeing? After the market reacted from there, you can see very clearly we have the fractal change of character. And that is your confirmation. We have that fractal break, which led to this fractal change of character. Meaning now the market is really bullish. Okay, we have sorry, this is a 4 hour order block, not daily. Sorry for that. We have this 4 hour change of character, 4 hour fractal break, 4 hour fractal change of character. Okay, so that means this order block was supposed to be a point of interest. Market never really tapped to this order block. I think it reacted from this small fair value gap, and it's currently buying from there. And also you can see that we have a fractal change of character here again. You have a fractal break, and you have a fractal change of character. So if I go to the 1 hour time frame, you can see we have your that is the fractal change of character that we are saying on the day of 4 hour. Of course, we expect whatever to be fractal on the 4 hour. When you go to the day 1 hour, it becomes a swing. Okay, so you can see we have a valid pullback from the 1 hour. We have this change of character, meaning now the market is respecting that fair value gap. And of course, from the 1 hour, you can see this small order block there where the market reacted from that order block, and we are currently buying. So of course, with this pair, I can also say that we are really bullish. So we are really bullish. So let's have our point of interest here again. Okay. In case the markets disrespect this zone, which is this order block from the 4 hour, In case the market decide to disrespect this zone, then you will be watching for buying opportunity around this area. Okay. So in short, the buyers or my view on GBP JPY, we are bullish and we should be looking for buying opportunity. So currently, this is a point of interest to watch. Once the market comes to this area and you have your 15 minutes confirmation, then take your buy from that area. You can also decide to refine it to this 1 hour zone, but also don't forget, the more you refine, the more you increase the chances of missing your entry. So you can decide to go with this 4 hour, at least because this is a very big zone. At least wait for a market to come at least to the 50% of this zone. Okay, at least to the first 50%. If the market gives you a confirmation around that area, you take your buy from there. But of course, if the 15 minutes inside here gives you a strong change of character, even before getting to this area, you take your buy. Because of course you know very well, we don't uh predict the market, but we react with what the market is telling us or what the market is showing us. So if the structure aligns with what you need to see, you take your buy. Because of course, if you place your fib from that high to this low again, you can see that the 50% is around here. If the market tabs there, gives you a 15 minutes confirmation, you take your buys. And where is your target? Your target should, of course, be this eye. Okay. And if you decide, you can still hold up to this area. But I would advise at least make sure your target is around this area or this eye around that area. So, guys, that is it for today's analysis. I don't know what you think about this analysis. Let me see from the comment section. What do you think about this? So in case I have an update, I'll drop an update on by Wednesday. I'll come here again and give you that update. So let me take this opportunity to wish you all the best. I wish you a very wonderful trading week ahead. So until next time, it's a bye bye for now.